Hello and welcome to Earnings Edge on NDTV Profit. My guest today is from Apollo Hospitals, A. Krishnan, who is the Group CFO of the company. Mr. Krishnan, thank you very much for joining us on NDTV Profit. Can you take us through the performance there? Because you got a good set of top line which is there, but the consolidated EBITDA margins are under pressure.
Thank you so much for having me online. And yeah, I think the results were good. Actually, for the quarter, we'd give a 4,850 crores was the top line for the quarter consolidated. Healthcare services of this, we have three segments of business, as you know. Healthcare services was at 2,463 crores. Diagnostics and retail health is at 337 crores, and digital health and pharmacy distribution at over 2,050 crores. In fact, if you look at the overall margins versus Q3 of last year, we have actually expanded our margins from 11.9% to 12.7% at the consolidated level. So there is no margin pressure at all on the consolidated level because that's primarily because the digital health and pharmacy distribution, which is our omni-channel pharmacy business, which includes the physical stores as well as the digital, we have broken even in this quarter because we had said that by Q4 of this year, we will break even on that front. We have been able to accelerate the break even and actually break even in this quarter itself, which is one of the reasons that the quarterly numbers and the EBITDA margins have expanded. You are probably alluding to healthcare services, where there is on the hospital side, there is a small compression in margin by 0.9% from 24.7% to 23.8% on the EBITDA. That is primarily because we have been adding a lot of clinical talent to grow our volumes and occupancy over the next 3-4 quarters, which is one of the reasons that there is some cost added there, which we should be able to recoup over the next 2 quarters.
How are you doing on the occupancy rate? I understand that occupancy rates have been slightly lower because of floods and other stuff in the third quarter. How are you doing that on occupancy?
Occupancy has broadly been good. 66% has been the occupancy for the quarter, which has broadly been good. Yeah, I could have gone up maybe 1% higher if the floods and cyclone situation, which was prevalent unfortunately in Chennai as well as some parts of Andhra, had not been there. We could have probably increased the occupancy by 1% because of some elective surgeries, etc., which got pushed out for almost a week. So broadly 66%, I think it's been okay. But over the next 4 quarters, our focus and target is to really get to 70% occupancy, and that we think we can do through volume growth.
Any particular expansion or new beds coming up in the next 3 to 4 quarters?
More than new beds in this quarter. So I'll tell. So we have two perspectives. One is the clinical talent that we added and the clinical programs that we are augmenting. We are significantly augmenting our cardiac, orthopedics, oncology, and all these Congo specialties that we speak of, gastro, which are all the large tertiary care specialties. Oncology itself is doing, we are seeing a lot of medical talent as well as technologies that we are adding, which should augur well for us over the next 3-4 quarters. From an expansion perspective, we have said that we are adding 2,200 beds over the next 3 years, and over 3,500 crores of capex is what we have already announced. You will see it evenly spread across the next 3 years, FY 25, 26, and 27. So next year we are adding, Pune, which is a new market, which should come by hopefully Q3 end or Q4 beginning. That's what we are planning on Pune. And then we are adding by Q4 Hyderabad, and there's one more hospital in Calcutta, which we should be adding.
Can you take us through how the average revenue per occupied bed has moved in the quarter, Q&Q and YOY?
So this quarter, the average revenue per occupied bed is now around the 56,000 rupees. Year on year, it has been it is 9.5% higher compared to the last year. And I guess Q on Q is not something that we typically track. It should be flattish around the same level is what I would presume. But broadly, it is in line with our expectations, and that's also because we have been focusing significantly on a lot of retail, corporates as well as insurance in our payer mix. And the payer mix has actually enabled us to ensure that this ARPOB is maintained, and we should hopefully be able to continue on this momentum going forward as well.
Interesting. You mentioned insurance because the regulator has been talking about and the industry has been talking about cashless everywhere. What is the kind of expected impact on your working capital? Because my understanding is that your working capital requirement will go up if the people who are reimbursing today get joined to the entire the cashless cases which are there.
I think for organized players like us, I don't think it does it matters so much because we have always been on cashless. Because historically most of the insurance companies have always empaneled us, and given that all our patients have the cashless treatment facility across all our hospitals, so we have never been on reimbursements. It's always been cashless for us, so we don't see any change in the way we are going to be operating as organized large players. It may probably be different for some of the unorganized players, nursing homes, etc. But I guess for us, it doesn't matter. From insurance perspective, what we have been seeing is a consumer who is insured is obviously wanting to go towards more quality treatment and is able to afford Apollo or Apollo-like players more today than in the past. And that is what hopefully some of this will do, and that access to quality healthcare and hopefully help them increase the base of insured also. That should help us in the long run.
And that will help you in consolidating as well, because many of the uh, people who now go to new polyclinic or clinics or smaller hospitals may opt for hospitals like you or multi-specialty chains like you, because that will help give them much more better treatment.
Yeah, that is the hope, because clearly we have protocols of care and clinical care protocols that is significantly higher. Because if you look at the standards of care that comes across our hospitals, we benchmark with some of the best in the world, from the US and elsewhere. And so clearly quality is something that we have been focusing on, that should help get more consumers come to the system as well.
What is the breakup of cashless to cash?
So that is not so. If you're probably looking at insurance today, insurance business for us is approximately 45%, 40 to 45% of our revenues comes from insurance, and that is all cashless,
Okay.
predominantly cashless. That's how I would say.
How do you see the entire pricing change for the industry? Because the moment you have cashless everywhere, there has to be some uniform pricing across the industry as well. Because many hospitals have tiered structures as well, and it varies from city to city and geography to geography. So, and within the city also it moves based on the kind of hospital and the care which is given. So, what kind of impact do you see on that front?
See, pricing is a very complex topic, and it's not a very easy. It is complex across hospitals, because if you look at a tier one metro in India, the cost of services and inputs which go into a place like Bombay versus a Delhi versus a Chennai and a Bangalore is very different. The kind of patients and the complexity of the patient who comes in is also results in his admission rates being higher. So all of those are various different factors that results in pricing being a bit different across geographies. We have a clear tariff which we work with across geographies, and that's very transparent to the insurance companies that we all the insurance companies that we work with. So I guess for us, we don't think that should be a constraint. It's a discussion that we keep having with each of the insurance companies separately, and I guess it should be fine. We should continue to be able to hold that. Clearly the services pricing in India continuously keeps, inflation is something that we see on the rise, right, everywhere. It is, if you look at the services, if you look at payroll costs, it is going up by 10-12%, cost of nurses, paramedics, clinical talent. So, we have to have an inflation adjusted pricing, which is something that we have been working in the past, and I think it will continue into the future as well.
But do you see a kind of a situation where the rates will be same, or at the same slab across hospitals within the city?
See, slabs or ranges can work, but again, as I said, it's not going to be something that you can work as. It cannot be very uniform, because there are various categories of hospitals, services, etc. It's a service industry significantly. So if you look at a hospital like Apollo, just for an example, if you look at the number of people that man our hospitals, we have 6 people per bed. If you go to another hospital, you will have 4 people per bed, because the quality of care, quality of nursing, quality of turnaround time when you come into the emergency, all of that matters, and all of that has to be costed in and priced in. So I think healthcare, as we always have been saying, is priceless. And I guess if only it's the patient who has to get the best in care. And even now, what we have been doing in India, and I think it's not just Apollo, most of the large hospitals, if you look at the care availability in India, it's one-tenth the global prices. And I guess not much can be done on that front.
Coming to your pharmacy and diagnostic business, you've been able to turn break even in this quarter. What is the kind of outlook that you have for this segment?
So pharmacy is growing at 17 to 20%, and I guess this quarter we saw 17% increase. We are hopeful that we should be able to continue on the 20% trajectory going forward as well. Clearly, as an omni-channel business, digital is now over 10% of our revenues. Digital profitability is something that we are focusing on. I guess 6 to 8 quarters from now, we should hopefully get the digital also becoming profitable, while the overall Apollo Healthco as an omni-channel pharmacy business and digital healthcare services has become profitable in this quarter. So we are the largest in the industry. Continue to add over 400 stores every year physically, continue to focus on digital expansions as well. And we are clearly embarked on this journey of an integrated healthcare model, which all of that with a combination of the primary care, diagnostics, digital healthcare, and the overall hospital ecosystem should augment itself and augur well for us over the next 5 years.
You told us that 3,500 crores is what you're going to invest equally over the next 3 years to expand your beds. Are you going to depend entirely on internal cash flows, or there going to be some fundraising also which can come in? And are you going to monetize some of your arms like the pharmacy or the online pharmacy and the digital business?
So, this round of expansions of 3,500 crores can be funded through internal accruals completely, and a bit of debt, because if you look at our debt EBITDA, even if you look at only the hospitals business, our debt is, our EBITDA is 2,500 crores on the hospitals business, and our net debt is now 775 crores. So I guess clearly there is room for growth. We don't expect any external capital requirement for this round of growth.
And what about digital and pharmacy? What is the kind of debt which is there, and is there a requirement to infuse further capital there?
So on the healthco business, the net debt is 575 crores. The good part of it is, as we said, instead of Q4, they have become break even in this quarter itself. So clearly, from a capital perspective, we really don't require any capital for growth. But yeah, opportunistically, we have said that if we get the right value and the right partner, we are open to take some investment into that company to grow it, and we'll have to wait to hear from us on that front, because as of now there is nothing specific that I have to share with you on that.
What could be the intrinsic value of that business, healthco business?
So I think it's if you look at the I think valuation is something that I will leave to the investors to come back. But I think close to $2 billion is what has been the intrinsic value that most of the investors have been ascribing to that business.
And you've been able to get good queries on that business from international investors or partners?
We are the largest in this business, and I guess the opportunity is very high. We can continue to scale this up 20% for a very long time, and the digital healthcare services on top is going to be a significant value add that we will be able to add to this business. There is definitely interest in this segment which we are seeing.
Mr. Krishnan, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
Thank you so much. My pleasure as well.